Now, T.S. Harihar is now with us. SP Prasad will just join us, and Samit Chauhan is also with us. Harihar, let me come to you first. What do you make of this move? You think markets were worried about the election outcome, and that's why a relief rally cannot be ruled out?
No, I think, Pankaj, the market was actually skeptical around the 9,100 level, which happens to be the previous high, I think, in early 2015. So what this Uttar Pradesh win will actually provide the market is the required launching pad to break and get into a new high. It had to get into a kind of a new zone where all the immediate resistances are broken. So I think that is probably likely to happen. A lot will depend on what happens on 15th of March, when the Fed announces its Fed policy. I would believe 25 basis points actually is something that's already factored. If it's more than 25, markets could get slightly worried. But I think if it's 25 or less than 25, I would believe the Nifty should now settle in a new zone, which is 9,100 to 9,400. I think that should be the new zone as far as the Nifty is concerned.
Samit, what will be your view? Samit, what will be your view on the Nifty post 9,000?
Yeah, Pankaj, we have been quite vocal on the market that Nifty is likely to give a decent breakout quite soon. If you look at the weekly, monthly chart, clearly bullish cup and handle pattern was clearly visible. So now, looking at the SGX Nifty move, we are likely to open beyond this particular move. So which can be termed, in a technical term, can be termed as a breakaway gap. So with this, we expect the Nifty to immediately move towards 9,500, 9,600 over the next few days. And if we theoretically project the target of this particular pattern, then it comes around 10,500, 10,800. That would be too early to take that call, but at least in next couple of weeks, we expect Nifty to move towards 9,500, 9,600. And now on the lower side, 9,100, 9,050 would act as a very strong support.
Right. If your target is 9,500, would Nifty still be a buy, even after the gap up opening?
Definitely. Now 9,000, 9,050, as I said, would act as a very strong support. So one can, keep a stop loss around 9,000, 9,050 and expect 9,500, 9,600 in next few days.
SP Prasad is also now joining us. SP, what is your call on the market? Post 9,000, what should one do?
As I mentioned last week also, good morning first to everyone. As I mentioned last week as well, Pankaj, I think we'll have to go look stock-wise and wherever we believe the valuations are rich or sectors. Like for example, I for a long time have not been I've been slightly more than slightly bearish on the IT sector. So I think we'll have to look stock-wise and then take a call, Pankaj. To take a call on overall market unless you're playing the F&O market, is wrought with danger. But overall basis, definitely one is bullish because obviously the government now has the tailwind to push through a lot of the reforms, and the government has shown its risk-taking ability, if one can put it that way. The ability to sell reforms is clearly coming through. So selectively look at stocks like, for example, a stock like Mahindra and Mahindra. I mean, is a stock clearly worth looking at, or some of the two-wheeler stocks worth looking at. If one were to give two particular...
SP, I just wanted to understand about market valuation. When you get such a mandate for one of the biggest states, what does market try to predict? What does market valuation, how does market valuation change then?
No, see, ultimately, Pankaj, the P ratios go slightly higher. But unless and until one sees earnings visibility to catch up with that, because ultimately the markets are discounting future earnings. Now, if the earnings don't necessarily catch up, then obviously, there is bound to be a correction. And I think, to my mind, more than even demonetization, which was overplayed, I think GST will definitely cause, quite some ruptures, because I hope and pray that there's a little bit more time given for everybody to settle down into the new system. But GST is definitely going to cause some ruptures, and in turn, what that would mean is both top line and bottom line. If you're talking of 40% as a top, so some of the quote-unquote luxury counters would have an impact, because 40% is a hugely usurious number, if I can put it that way. So I think one has to therefore tread with caution. I mean, everybody's, crystal ball gazing and talking about 10,000, etc. I think one has to be kind of mention these sort of numbers with a lot of caution.
Right. Mr. Harihar, would you agree that even if the market valuations were to go up, earnings have to follow for markets to move on from here on?
Yeah, I think that's apparent because eventually I think whatever valuation we are at, your earnings will have to justify and your growth, more importantly, will have to justify. I think that's, of course, the bottom line. But you know the landscape, the reason the landscape has changed, there is now a clearer visibility that 2019 probably also, the central election goes the way of the BJP. It may be too early, politics is a funny game, so things change quite fast at short notice. But I think what the UP election does is that if despite demonetization, if despite the, the media unpopularity, if they can come with such a thumping majority, I think what it means is that 2019 the BJP may have almost, I would say, virtually no opponents. So I think that is what people are betting on. That is what markets are betting on. And that means the reforms, the economic policy should acquire a certain tinge of stability over the next few months. So that, I think, that is what I think the markets are betting on.
All right. Samit, you gave a target of 10,000 on the Nifty. Can you tell us a time frame as well? And when you calculate based on retracements, what are the levels at which perhaps the markets can look at stalling or correcting? Because, a lot of people still have this left out feeling. Look at the FIIs that only were buying in a small way over the last few years, last few days actually. So can you tell us what are the levels at which the Nifty could halt, and when do you see 10,000 coming?
See, Anisha, this particular pattern has developed over the past couple of years, and now it has given a decisive breakout with a gap. So when you see such important levels, breaking with a decent gap, either it would be a gap up or downside gap, then we generally see a follow-up buying coming in. So initially, as I said, targets would be around 9,500, 9,600. These are the extension ratios of previous up move. So at least in the near term, we don't expect any major correction before 9,500, 9,600. And the targets which we had given of 10,000, 10,500, which is the theoretical target of the entire pattern. So probably we expect, looking at last 10 to 12 months price move, we expect this price target to get achieved in probably next 6 to 8 months. I know it would be too early to take that call, because after 9,600, if we see at least a consolidation of 2 to 3 months, then probably the next leg of the rally would be much faster, and in that case we expect these targets to get achieved probably in next 6 to 8 months.
Right. So far, Mr. Prasad, the markets have only corrected a little bit and gone up. What do those people do who feel very left out by now? Because like Samit is saying, maybe a consolidation comes only a little later when the markets moved up higher. You spoke about valuations, but what do those people do who feel left out?
See, frankly, if one is a small, medium investor, I think SIP strategy has clearly worked for them. So I would extend that logic even to look at Nifty as a pack, for example, because everybody is expecting Nifty to steadily keep going up, a secular growth in Nifty. So I would much rather, pare down people's expectation of what kind of returns that they can expect from the markets. I think that's also important, because the sort of returns we've seen from immediately after demonetization to now, surely expecting that kind of return to happen in the next 3-4 months would be an extremely brave person to take that kind of a call. So one is definitely pare down return expectations. Second is you look at a lot of better performing funds across large cap, multi cap, small cap. Look at a sprinkling of these funds to look at. And also, I would honestly ask people to look at some of the ULIPs. ULIPs had fallen out of favor, especially the investment-oriented ULIPs, where there's a lot of loyalty bonuses and stuff like that given. Not so much the traditional insurance policies, but the ULIP oriented. So these are some of the calls one would take. Of course, if one is a seasoned investor, then you keep researching stocks. So there are obviously nuggets available in the market. I talked about some of the pharma counters. Clearly is one thing you can look at. I mentioned about M&M. So you obviously need to do a lot more research now to try and see if you can pick these nuggets and they don't turn out to be duds.
All right. Mr. Harihar, do you think the markets have the legs to go up more? Because, a rotation can always happen. Not all pockets of markets have uniformly gone up over the last few days. So, do you think perhaps the infrastructure slash capital goods space could be one to watch out for? They haven't really outperformed, like, say, some of the housing finance companies or some of the consumer names. Could they be in focus? Because the belief is that now the government can push ahead with their reforms and, once capex picks up, these stocks would be in favor.
Anisha, I think the enthusiasm over elections has been, so high in the last few days. There are a lot of people who have forgotten that the IIP number at 2.3% was actually encouraging when it was announced last week. And 2.3% actually is a vast retracement from minus 0.6% that we saw in December 2016. So IIP is one number in the first month of remonetization has given a very, very good picture. Whether it sustains or not remains to be seen. See, there are two things in my view that I see visibility in the market. Number one, we have seen a gap up opening. Logically, what happens is there will be shorts in the market which will now rush for covering. So that will take the markets higher. And then we'll have all these short call options which will come and start covering. That will take the market still higher. So obviously, you're not going to end the rally at 9,100. You will go to 9,300, 9,400 immediately. How much further from there? I would agree with SV that it largely depends on how the earnings pan out after that.
Right. Harihar, what happens to the low PE stocks? You think stocks where people have a left out feeling, they have not done well, you think flows can get attracted towards that level? That is something which is always seen in the fag end of any rally.
See, typically, if you look at historical rallies in the past 20 years, any rally at these levels is normally led by the high PE stocks and not so much by the low PE stocks. Low PE stocks are typically what I call those abandoned ones which nobody really wants to look at. I don't see somebody suddenly jumping into an IT or a pharma or even a PSU stock just because it's a low PE stock. I think it will still gravitate towards the Reliances, the HDFC banks, the Larsen & Toubros. These are the kind of stocks that will still get the flow. So I don't see flows going towards low P. I think they will still gravitate towards the high volume and the what I call the center of news stocks in the markets currently.
In fact, if I were to quickly interject, Pankaj, I would strongly, tell people that, if you bought some Dutch stocks, they have all gone up because of the market sentiment. Great opportunity to exit them because there is liquidity in many of these names. Just exit. I mean, don't be greedy at all. I think this is an opportunity to clean up your portfolio. That's what I would strongly, tell people.
SV, you think markets are forgetting that what happens with Fed, what happens to dollar, all of this will also derive flows. So markets would forget that for today.
Yeah, I think right now, and I was just hearing TS, I also noticed that rupee has gone up by 43 paise today in the morning trades. So, clearly people won't look at that. Also, there is a fundamental reason for that, Pankaj, and that is that the domestic flows are still very robust. So, given that domestic flows are robust, they act as a major counterbalance to the FII flows. So I think that's something that we need to definitely, I think it's a big positive as far as Indian markets are concerned, and one can see that, and one can see a visibility of domestic flows going forward. I think the Indian middle class is convinced about the way the future of the Indian economy. So that's clearly panning out in terms of the domestic flows. So I would not be, frankly, too much concerned right now about what happens to FII flows. And also, indeed, I think the pension names are slowly coming into India. A lot of new names are coming in, I was told. So that's again a good sign. So it's not only the India funds or the strategic funds are investing in India, but the real long-term guys who are willing to put their allocation to India.
Right. In terms of Fed outcome that comes in tomorrow night India time, Harihar, what do you think markets would watch out for?
See, I think 25 bips, Pankaj, to me is kind of factored in. So 25 bips or anything less should be, I think, neutral. Anything above 25 with the hawkish language, I think, could be some cause of a worry as far as flows is concerned. But I agree, FII flows relevance is gradually reducing as far as Indian markets are concerned.
Right, but still they are important, right? Because they tell us about the trend in the emerging markets. They tell us about the trend in what's happening globally.
Yeah, of course. But see, between October and Jan, you had $12 billion going out and nothing happened to the markets. So I don't think that's probably being overdone a little bit too much.
Right, just awaiting the market's opening, expected to be a record opening. The pre-open session is indicating 9,091, which is lower than what SGX Nifty was actually indicating. So if I look at SGX Nifty, that's also fallen down 9,156, but still it's expected to be a gap up opening. You have the first trades on the screen. Nifty has opened about 9,094. 9,119, and I think we should hit the record high in just a matter of second. I think we're just in and around there. Yes, I think we've hit a record high for the Nifty. The lifetime high 9121. Today's day high is 9121 as well. So Nifty has hit a record high. It's gone up quite significantly on the back of course, the UP election and the verdict over there. 9,117, 181 points higher. Sensex up 600 points, 29,500. So let's see where the markets gain from here or actually give up these gains. NTPC is up 1.5%. Tata Steel is up 2%. Tata Power is up 2%. Asian Paints is up about 2.5%. ICICI Bank is the top gainer. Remember that ICICI Bank ADR was up 5.5%, so it was already sensed by the market that this is going to come, this is coming in, and it's actually happened. So ICICI Bank is up around 5%, 284. Remember, it's one of the high beta names here in the Indian markets, and that's why always tends to perform with the markets. M&M 2.9% higher, 3% higher, 1,528. HDFC Limited, that's the big stock, 1,417, that's up close to 3%. That's a name which has done exceptionally well, continues to do so. M&M is also among the gainers. Yes Bank is among the gainers, 1,528 for Yes Bank. I think there is an upgrade on Yes Bank from CLSA. Maybe that's why it's buzzing in. Bank of Baroda is up 2.8%. 163. Banks are the best way to play the Indian economy, and all the banks are actually buzzing in at this point of time. Bank Nifty would also be at record high. That's Kotak Mahindra Bank for you. That's up around 2%. ITC is up about 2.5%. That's about 270 odd rupees. Aisha Motors is up 2.5%. Ultratech is doing well. It's up 2.5%. IndusInd Bank is up 2.25%. L&T, Kotak Bank, Idea is on the higher side. Coal India is down 17 rupees, but you cannot call it a loser. It's actually going ex-dividend by 18 rupees, so actually it's up close to about 2%. So that's also a name which has done well. And since the dividend, now the dividend is behind and it's gone ex-dividend. Anisha, any names on the mid-cap side that you can pick up?
Well, I think most of the action today is Pankaj in the large cap stocks. Heavyweights like ICICI, HDFC, ITC and Reliance are the ones going up. Amongst the mid caps, we've seen good action in Power Finance Corporation and Suzlon. They're up about 3%. We're also seeing Dish TV up 3%, GMR Infra is up 3.5%, and Sunil High Tech up 4%. This is on volumes higher than the average. So these are the stocks to watch out for. IFCI is also up about 2.5%. On the losing end, you mentioned Coal India. And the JP group of stocks are seeing some profit taking. Now, they had rallied quite significantly over the last few sessions. So you have JP Associates down 3%, Jaiprakash Power Ventures down nearly 2%, and JP Infra at this point in time is up about 0.5%. But the outcome in Uttar Pradesh, the political alignments there tend to, or it is believed, tend to impact how this stock does. So at this point in time, we are seeing some profit taking, or like what Mr. Prasad said, if you see some stocks that have run up too much and you don't see the earnings visibility there, perhaps a good time to take profits. Maybe the markets are doing that, and we are seeing some profit taking coming in there. There are a few other stocks that have moved up. Some of the real estate stocks are doing well, like Unitech is up. It is in any case a high volume stock. That one is up. Ansal API is up 6%. So we are seeing some action coming in there. So we've had a good opening. Samit, what would you do with a heavyweight like Reliance Industries? It's back about 1,300 rupees a share. The recent couple of days, the little bit of correction that we got there, would it be a good opportunity for you to buy this stock?
Definitely, this particular stock has already given a decisive breakout of its 8 years of congestion zone. So a couple of weeks back, we witnessed a good price volume breakout. So clearly, low hanging fruit is already gone. So if you want to buy this stock, you have to chase prices. So any dip, any minor dip would be a very good buying opportunity. And going forward, we expect Reliance Industries to move towards 1360, 1400, which would be a near-term target.
All right. Near-term targets for Reliance Industries now higher. What about the other elephants or the giants that take slow and steady steps? Mr. Prasad, ITC has seen a good move today. What levels would you be watching out for ITC?
See, ITC, in terms of earnings visibility, it's clearly there. I mean, there's no question about it. I mean, this is one stock that's always been like a bellwether stock. I mean, whether you like smoking or not is a totally different matter. So, in this kind of a market, one would tend to, hold on to some of these unless you made some huge gains and want to pare down some. But then the next question that comes in is that where do you then invest the monies? You're not going to tell an equity investor go to debt when interest rates are also down. So ITC, frankly, ITC, Reliance, these are names which one would tend to hold on to. I think there are enough, for example, some of the public sector bank names. I think it's a great opportunity to exit some of these names. I mean, some of them have really run up. You mentioned about IFCI, so many other names. And of course, TS's favorite bear stock, ICICI Bank, has also run up. Now it's a question of when do you exit. So I think this opportunity should be used more to exit.
Right. So, Mr. Harihar, let's come to your favorite bear stock, and that is ICICI Bank. It's up 5%. But really, amongst the bank stocks, this is the laggard. You look at IndusInd, or you look at Yes Bank, and you look at the charts, and they look lovely. ICICI is around 285, but again, sees a lot of resistance around 295 levels. What would you do with ICICI? Do you think now it's going to be different?
No, I really haven't changed my view. I continue to be short on that stock, because I think there is a huge fundamental question mark over that company. There is an issue of asset quality. The actual asset quality probably is a lot worse than what is being visible as far as the balance sheet is concerned. You have serious concern over the quantum of debt that they have. There are worries over the productivity in terms of revenue per employee and profits per employee. So I think for a private sector bank, my worry is that I have got better choices in the market. So if I want to invest in a private sector bank at all, I would rather buy a stock like an IndusInd Bank or a Kotak Bank or even a much smaller RBL bank. I don't think that ICICI Bank earns that kind of return on investment or return on equity that would justify a fresh investment in that bank.
Right, but Harihar, you think that private banks are the best way to play the Indian economy? They have been in the last 5 years. A basket of them would continue to outperform?
Oh yes, honestly, I don't see a much better proxy for the Indian growth story other than the private banks. Public sector banks, have their own problems in terms of government ownership, in terms of NPAs, etc. I think the well-managed private banks, you probably cannot expect multi-baggers among private banks, but if you want, let's say, an 18-20% annualized return, I would believe that private sector banks, to me, would still be the best bet as far as the Indian market is concerned.
Right. SP, would you broadly agree private banks would continue to do well?
Yeah, clearly. But the only thing is that, as T has also mentioned, expectation of multi-bagger is now a thing of the past. So the only public sector bank I would throw into it is my perennial favorite, SBI. I think that's a stock I would throw in because it's a steady stock, and they've been very determined in cleaning their books. The merger is going to happen. So I would only throw SBI from the public sector names into the private sector bank pack.
Right. Samit, what will be your call on SBI?
See, Pankaj, we are quite optimistic on SBI. In fact, a couple of days back, we witnessed a good price volume breakout from a small consolidation pattern around 270, 271. And we expect, SBI to move towards 281, 285. So clearly, yes, this stock has been in a strong uptrend. Of late, we witnessed some consolidation, but slowly and gradually, we expect SBI to move towards 284, 286, which would be a near-term target. And now on the low side, we see base shifting higher now from 250, 251. Now it has shifted higher to 265, 264.
Right. ICICI, what will be your view? 4.5% higher?
See, the disclosure on Friday itself, we had recommended this particular stock to our clients despite the fact the stock was falling since last 6 to 8 days. But if you look at the overall chart structure, 270, 268 has been a very strong support. There are multiple technical evidences that were converging around it. So with a near-term view, we had a target of 298 and we would maintain with our target of 298 for ICICI Bank. For us, any dip would be a buying opportunity as long as this particular stock holds its strong support zone of 268, 270.
Right. Thank you so much, gentlemen, for taking out time for us. Always good to get a perspective from USB. Just before we go, any disclosures?
State Bank of India. I think that's that's the only name I've mentioned today where I have a small holding.
Mr. Harihar, for you?
I think we really didn't discuss any stocks or recommendations today.
Mr. Chavan, disclosures for you?
I don't have any personal holdings in the discussed stocks, but yes, our clients might be having positions.
Thank you so much, gentlemen, for taking out time for us.